educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I posted a chart here from Mr. Z here. It's the chart of silver. Boys and girls, I am very, very bullish silver and gold. I'm waiting to get long gold, and I'm also looking at silver. I don't trade silver as a futures too much because my specialty is gold, and sometimes silver gets a little bit hectic, and I don't like hectic. I like quiet and peaceful. And even sometimes gold is not quiet and peaceful. But anyway, I wanted to show you this chart. The reason why is over the years, as you know, I worked at Drexel Burnham, and during that time from 76 through 1982, I spent 90% of, well, not that much, about 70% of all my business was done in silver, gold, and copper. And we didn't have crude oil contracts at that time. We barely had treasury bonds. They didn't come on until 76. The S&P didn't come on until 82. So that was the really big one to go along. I did hogs, cattle, bellies, the usual stuff. But silver and gold was what I really did a lot in. And I did a lot of physical stuff. I did it through three brokers in the LA area, A-Mark, which is one of the bigger ones, and it was the biggest of all, and it's listed on the New York Stock Exchange now. And then I did work with Wilshire Coin and then also American Coin, and Leroy Linhart was the buyer there and also the seller. But he did all of his gold buying and silver buying he did through me, and then I would get it through Handy and Hardham, whatever it has. Folks, it's damn near impossible to get silver rounds. I mean, I was shocked. I checked around here in Tucson yesterday and just called a couple of dealers here. And to buy a round, just a regular beautiful silver eagle that they're printed by the Mint, they're getting an $8 premium, folks. $8 premium on $25 silver. Are you kidding me? Hello? That's 30%. I mean, I can't believe that. I've never seen. Usually it was $2. Usually at the most $2 a coin. They're just impossible. And if you want to get in quantity, forget about that. You have to get in line. There's just none available. I think I found a total of 10 yesterday. And with premiums like that, it's just amazing. Something's going on there. I mean, we watch all this other stuff that's going on in Bitcoin and all the other things, but my goodness, there's something going on in the physical silver market. It's really tight. We were quite a bit lower in the silver today. Hold it, it says, but what premium are they paying to the folks that will sell? I have no idea about that. All I know is what that. Well, I could find that out because I talked to Leroy yesterday and never asked him what he had to pay for it. He was telling me he had to pay $6 to get any quantity at all. He said if he wanted 100 coins, he says it's going to be $600 premium right off the bat because of the fact that it's that they're just really difficult to get. And if you want to buy 1,000, he said they're just totally not available. 1,000 ounces of silver is nothing, folks. That's really not very much at all. Okay, let's move on to a couple other things here. I wanted to show you the silver chart because I think we've got a chance here. And here again, those are those two chance brothers, Slim and None. But here's what I'm looking at here. We had a pretty bad break here in silver this morning. We got all the way down to 24.5. We've jumped back 60 cents an ounce so far today. But we've got a beautiful support there at the 78% level right there at 23.80 per ounce. That's a perfect ABCD, and you can see the ABCD from December down into January and then up into February. Absolute perfect ABCD up there at $30. And here we are, down about another 20% or so in silver, and we're setting at an area where it should be some pretty good support at that point. I don't know if we're going to get there or not, folks, but if we do, that's where you really have to take your keep your eyes on a ball at that point because you've got so much going for you. You've got a 3 drive to a bottom pattern, an ABCD pattern, a 78% retracement, a 1.618 expansion, 2 ABCD patterns. I don't know what else you could ask for. I really don't, but that's neither here nor there. Now, this next little segment that I'm going to do here is for those of you that really don't have any inclination to look at patterns or anything like that, but we're going to take something that we've been watching for a very long time, as a matter for several months. It's one of the most actively traded stocks that they have today, and that is GameStop. If you'll remember, way back here when it was 480, we said there was an ABCD pattern that was going to bring the stock down to $38 a share. And all you have to do to figure that out is you add B plus C and subtract A from that, and that'll get you the price of $38.70. And that's what the low was there on the 19th of February. From there, we rallied up to a 382. Then we backed off a little bit, and then we ran all the way up to the 61% retracement of the high of the move at 480 and 78% of point C, which was at 380. There were two numbers together. Within the numbers came in at 340, and the high on the stock was 344. And what did it do that day? That day, boys and girls, it dropped in half. It went from 344 all the way down to point B, and then up to point A, and then back down to D. And look where the low on D was yesterday, folks, at $1 and $125, and now we're up about we hit 180 a little while ago. So even if you don't pay any attention to the ABCDs, at least think about it a little bit. I'm going to be doing an all-day seminar, 5 hours, and we're going to make some money off these ABCDs on that day. So if you get a chance next Wednesday, the 31st, I'll be in there with guns a-blazing, and we're going to be looking for a lot of these and adding to some of the things that are very, very important, like market reaction to news and market feedback when one market is acting different than another market. Those are things that are incredibly important, and that's what you have to do when you're trading, is to add it all up. As you notice, on none of my charts do I use oscillators. I don't use any stochastics or moving average or anything like that. I just look at the bar chart. If prices are going up, there's more buyer. Prices are going down, there's more sellers. That's all I'm really looking for, not much more than that. So, but we're having some very, very wild swings today. A couple hundred points in the Dow is nothing anymore, and volatility is the name of the game, and it's going to be continuing to be the name of the game all through 2021 and probably through most of 2022. But this is built into it. We started seeing it eventually or immediately in the middle of last year, right around the April time frame. Right around March, because that's when we had the big break in the market from the COVID from January into March. We made that March 23rd bottom. So that's the main thing. Now, I do want to show you the gold chart here, because this is the one that we'd like to see happening in gold. We're about $30 away, but as we know, $30 in gold is not very much. We hit 1246 today. 1746 today, and took out the highs of the previous day, and then back down again. And that tells us that we got a better than 50-50 chance that we're going to make 1705, folks. That's the way it looks like to me, and we'll see whether it's going to mean very much or not. But I think we got a chance to hit that. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the opening call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted a chart of crude oil. One of our listeners from yesterday said, how did you know that crude oil was going to top at 61.15? Duh, I didn't. I was just looking at the pattern. As you can see here, we have an ABCD Gartley right at a 78% of the previous day's high. Nice ABCD, but there's something else in that chart, folks, that is extremely important, and that's one of the things that I'm going to be sharing with you folks on the live trading day. Our goal that day is to make money, folks. I know it's a lot of money, $295, but we've done, this will be the third one. The first two were very, very successful, and I think we will be okay this time because, my goodness, we got lots of volatility, and ABCD thrives on volatility. That's one thing we absolutely know for sure. So let's pay attention to these markets because we're going to have some great opportunities coming. I mean, just look at the swings today. We've been 30 up and 30 down in the S&P. That's 60 handles, folks, in just a matter of a few hours. And speaking of that, one of the things that you want to learn how to do is to get market feedback. Uh-oh, I'm going to have to sneeze. Bear with me, boys and girls. Let's look here at the S&P from last night, folks. Let's just get this up here. You'll see here, I'll cover Bitcoin in just a second, folks. Just bear with me here. This was last night's action, and yesterday, all over Tuesday, Wednesday, and early Thursday morning. Hold on. We might have a lucky caller calling in today. Let's just double check. And David White. Oh, okay. Hold on one second here. Let's get hard to sneeze just once, but I am. Okay, just give me a second here. Just a minute here. Okay, this is the, I hope this, this is the S&P over the last several days, Tuesday, Wednesday, and early morning. Notice how quiet the market would try to rally, folks, in the S&P. Boy, that would, look at the other times when it did this. It literally exploded of at least 20 or 30 points, and this didn't do that at all. And then when we broke, we broke really badly all the way down to 38.45. And then we've rallied back, like I just said, 35 handles back up to the highs again. So we're having great volatility, and that's the kind of stuff that you would really like to see. But when you're looking at a chart like this, it's giving you market feedback that there is not a lot of buyers coming into this market. And that's all that's really telling you. It can't even make a 382 retracement, folks. I mean, that's a really bad sign. And when you stop and think it was there for, well over 3.5 hours, and then of course it gave up the ghost as the market opened, and it took it down another, 40 handles. So that's what market feedback is all about. It's just trying to tell you, you don't need an oscillator to tell you the darn thing is overbought or oversold. What you have to determine is where you're going to enter the thing to see how much money you have to risk. By the time you have everything set up, 1 second, please. Your oscillators to turn and everything, the market's already moved 15 handles against you. That's what I have against moving averages. They're exactly what they say they are. They're moving and they're average. And I think you got to be just a tiny bit above average here, to beat this little puppy. So those are some of the comments that I'd like to make to hope that you understand where I'm coming from, because I am just a technician. All I do is look at bar charts. Now, let's get up to the big daddy rabbit, and that is Mr. Bitcoin. One day everybody thinks it's going to 100,000. The next day it's going to 0. This is Bitcoin, folks, since the beginning of the year, since January. I want you to see the corrections that we had here. We went from 42,000 all the way down to 28,000, 16,000 points. And we went from 5,800 all the way down to 4,200. Guess what that was? 16,000 points. And 16,000 points is going to take us right at 48.5. And we could be there very, very shortly. But that's nothing more than the market repeating itself over and over again. I've mentioned this 1,000 times. This is going to be 1,001. Dr. Andrew Lowe, in 2001, published a book called The Non-Random Walk Down Wall Street, where he challenged Burton Malkiel's work of the chaotic nature of the stock market. Malkiel said the market was totally random, and Dr. Andrew Lowe and all of his boys from the financial engineering part of MIT said, no, sir, it is not random. It is there are patterns within the market, the market is chaotic, but within the market chaos are these non-random patterns that repeat over and over and again. And the two things about that is, not only do they appear regularly, but they are predictable within limits. And that's what we do with these patterns, is to try to find what that predictability is. He studied 800,000 patterns, folks, over a 38-year period from 1962 to 1998. And my goodness, folks, when you got that many patterns, head and shoulders, double tops, double bottoms, pennants, flags, all of these things had mathematical characteristics. And that's what we do with these numbers, is to try to add the numbers of sacred science, of which the Fibonacci summation sequence is a part, and to give us a spot to say, oh, where are we going to buy it? Now, today, boys and girls, we had an absolute perfect buy signal in wheat, and it isn't working. Well, not yet. Anyway, the buy came in at 6.15 on the week, and we use a 10-cent stop on that, so it might not work. It's down about $100 or $150 against us right now, but it's a butterfly pattern. I mean, it's a perfect Gartley pattern. You can't do anything any better than that. Now, yesterday we were talking about the euro. If you remember, we were saying the euro was getting ready to go down and make a double bottom in the euro, and this is an hourly chart going over the last several weeks. You can see the ABCD patterns coming in here, and the target on this was 18262, which was a new bottom. Now, there was we didn't flash a buy signal there. We were covering in short positions. Basically, that's what our game plan was, so we stuck with it, and that's what we did. We have not instituted any longs. But if you look at this, what happened when it got to that level, it just kept on going. And then that's what will happen sometimes. You see the D level stopped at 182.62, and this market went way below 180. And that's a lot of points, folks. That's over 100 points. So if you'd have bought it there, I mean, you certainly would have had a 25 pip stop or something. But we did not give a buy recommendation on this. We just said, you see where it says potential. Potential. If you want to be potentially, you have to act potentially, and that means sometimes it's not going to work, so you got to put a stop in. When we give an order, we try to give the actual stop loss within limits. Somewhere between $250 and $400 on currencies is usually enough. Crude oil and gold, you got to give a lot more. In the S&P, usually about 10 points in the S&P is all you really have to get. So those are just a few of the things that you got to think about when you're doing the trading. When we come back, we're going to look at a couple cross rates just to see where we are, because we've got a really, really big decision to make here from our good friend Rich Anderson. He sent us a little heads up on something that we should pay attention to, but we'll cover that after the break.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, back, folks, and we are going to be taking a look at the wheat market. I just put the chart of the Gartley. It started to work. We're only out a half a penny, folks, $25 after going against us about $2.50, but now it's coming back a little bit. Put our stop under the low of the day now, so your risk is only 5 cents or $250 to be a farmer, but that's a perfect Gartley. You can't ask for anything more. Right at the 618. A lot of selling in beans and meal and oil and stuff today. That's pulling corn down and also the wheat, but the pattern's there, and there's got to be news to make it get to this level. Otherwise, it would be at a much higher price level for sure. All right, now let's move on to one other one that we need to talk about here, and that is this U.S. dollar index. Rich sent this to us. I think it's worthy of our examination because Rich Anderson's a pretty smart dude here. This comes from one of the people that he subscribes to. It says, if the dollar index is going to get moving, this is a logical place for it to do so. That's why we're seeing so much weakness in the euro, because the dollar index is moving. And we all know that the inverse correlation with the S&P 500 by now, you can see that's an inverse correlation. In other words, you flipped it over, they would be lined up perfectly. So this means there's a possibility, and here again, we're talking about maybe not, but looking at a market that could be getting ready to sell off a little bit. Well, we've already come off from 39.70 all the way down to 38.45. We've come down 130 handles in a matter of 4 trading days. So there's been something happening, if nothing else. That's when we had the 3-drive pattern up there. So that's why we're paying close attention to this, is this dollar index. Now, do I follow this at all? No, folks, I don't. I look at one chart. I look at the dollar index. Is there a tradable pattern there? And then I make my decision. I don't care what else all these other people are thinking and all this other stuff that's going on. That doesn't make any difference to me because it's over my pay grade. All I have to do is to look at that bar chart and determine how much money I have to risk to see if I'm going to get in the darn thing. That's the bottom line. And if it works, bada bing, bada boom, I've got something good going for me. If it doesn't, I move on to the next one. It's that simple. You know, someday we're selling eggs, someday we're buying cloth for garments. We don't know. So, but these correlation charts, sure, they're interesting. And yeah, maybe they do mean something. But for someone who's a technical trader that's looking to make a buck on this stuff, it doesn't really make that much difference. Just like, if I wait for an oscillator turn, I've given up too much. But if I go in at point D, of an ABCD pattern, I know pretty much where I stand there. I look at the CD leg. Is it relation to the AB leg? Yes, I look at all that stuff. And so I'm looking at the X and Y axis and trying to get where I'm on. The reason why I give me this little tirade that I'm on today is I got one email yesterday. I got 2 on Sunday. Is would I be better off looking at some of the fundamentals? And my answer to the gentleman and the young lady that said, I says, which fundamentals do you want me to follow? Well, where do you think they get these newspapers? Oh, by the way, speaking of something really great happening to a wonderful individual, Bill O'Neill, folks, sold his company today. Started with Daily Graphs out there in Santa Monica, California, back in the 60s. His stepson was my daughter's very first date, and we knew the O'Neill family quite well, but he made it big. He risked everything he had, folks, every nickel, dime, and quarter that he could scrape together 35 years ago when he started Investors Business Daily to go after none other than the Wall Street Journal, and he beat him. He passed the Wall Street Journal in subscriptions many years ago, but he sold it today to one of the large publishing companies, and I'm sure, Bill's in his 80s now, so he's probably already retired, but I know he's got his hand on the business from some stretch of the imagination. Okay, now let's move on to another one that we've been talking about, folks. We talked about that 3-drive to a bottom pattern in the Treasury bonds. We've now been up 5 days in a row. We hit 157 and change, a little bit above it, so that completes that ABCD pattern. So that was a nice move from 153 to 157, and that will be enough. Now we'll expect a little bit of a pullback, and from that level, we'll be looking at something that could be a little bit better. As far as a retracement level, we want to see if it'll make a 61% retracement of that, which would bring it down about 2.5 points of the 3 points that it made. So those are just a few of the ones that we're paying very, very close attention to now. Regarding the chart that Rich sent to us on the dollar index and the inversion, I'm not trying to downplay that chart because some people can use that. But folks, if you're just looking at bar charts, you really can't think of stuff like that. I mean, at least I can't, because it clouds my thinking. If I look at something, then I know exactly, at least I think I know what I'm doing. And sometimes I don't, sometimes I do, but try to come out on top the best we can. Now, since we're talking about the gold and silver, I wanted to bring this one up because this is the one, get this up here. You see here, this is the GDX. We're about at a 61% retracement, given the fact that we had some lower lows today in silver and platinum. We probably got down to this GDX, which is the gold miner index, right at the 61% level, around $32. That should be the low here. That's why I'm looking for a low in the gold and the silver in the next few days. And the fact that silver came back so very strong. Sorry, folks. Two frogs in my throat, got rid of one of them. Anyway, we're watching for a potential bottom here, but it doesn't look like we're going to be moving down into the next thing. Larry's saying something about George Clooney's tequila. He makes tequila. One good thing about George Clooney, do you know what he did on his birthday this year, folks? This is a first class guy. Of course, to him it's peanuts. He gave his top 11 friends, each of them, he gave him $1 million in cash. And I think it was it 14 people? I thought it was 11, but maybe 11 or 14. But he gave all of them $1 million. Some of them, I'm sure, didn't even need the money, but that's a pretty nice idea. I gave my only friend $10, and he gave it back to me. He said I needed it more than he did, so that's probably not a bad idea. All right, now I want to talk one more second here about the stock market and where we stand, because people have asked me, is this the major top? Boys and girls, I have no idea whether it is or not. All I know is that the patterns that we made at these levels can be indicative of something very, very important. This is this 5-wave reverse point wave that we've looked at here several times. That's all we're looking at. You can see the 1, 2, 3, 4, 5 expanding triangle. That's what it is. It's right out of Gartley's book, T6, expanding triangle. Wells Wilder identified this way back in the early 90s, and he sold it as the reverse point wave system. Spot out of Gartley's book, just like Charles Lindsay did his thing with Trident, and also the other gentleman, Frank Tubbs, also sold the ABCD system out of Gartley's book. I think more systems have been sold out of Gartley's book than all the other books, for sure, because you've got so many patterns in there, and they do work within limits. So let's take a little break. 877-927.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, someone asked a question during the break is why is trading so difficult? Trading isn't difficult. It's the execution that's difficult. I mean, you have to literally your trade starts when you click the button and put the trade on. That's when your trade starts. That's when you have to assume the risk. Other than that, it's just chess. It doesn't mean anything until you have skin in the game. Trading is nothing. Everybody can paper trade, without any trouble at all. It's when you put money in the game is where it really gets the stuff. That's why what you have to do is disassociate yourself from the money, and then you're going to be far better off. So that's my 2 cents worth for what it's worth. Anyway, let's remind ourselves that these markets go both up and down, and they usually continue in the same direction for more than we think they will. And we've had a nice correction in the stock market. We've gone down. We've rallied back 40 handles already today, but we've dropped 140 handles from the high at 39.76. We went down to 38.45 today. Made that a significant correction, and now we're going to see what the next thing brings to us. I think our guest yesterday, Stan Harley, made an incredibly important point, and that is he's looking for a low to come in the market sometime in early April. That sets up one of the most strongest seasonals that you can have is from April into May, when you get the final sell signal, sell in May and go away. That would be really one to look for. That's what I am really watching for, and I'm assuming it'll be sometime after Easter week. Easter will be Sunday, of course. Palm Sunday, and then Easter Sunday will be on the 4th. So it'll be that weekend after the week of the 4th to the 11th, something like that, is what we're going to be doing and what I hope to do, and that is to map out a strategy where we can add to positions if they start to work, like we did in the gold market on the way down. This gold market has not been easy to trade on the short side because it bounces back too quickly. I mean, we should be trading at under $1,700, under $1,700 I would think, given what silver did, but no, gold isn't. Gold's trading at 17.29, and we got out of it at 17.27. We got out of it at 17.30, and I'm waiting to rebuy is what I'm waiting to do. It's been good to us, so it'll continue to be good to it, but we have to do it under our terms, and so far those terms have not been met, so we're not going to get involved with it at all. Okay, let's move on to one other thing that I wanted to bring to your attention, and that is Mr. Appel, because this is a very important. We brought this to your attention yesterday when we were on the show. Exactly at this time, we were making a beautiful Gartley there at 121, and we failed there, folks. Once we went to 120, that told us that Gartley had failed, and it looks like we could be looking at 116 here on the Gartley if it fails. Now, this is where there's a perfect Gartley pattern there at 121 and change, 121.20. But once you go a point under that, 120.20, you got to take that loss because, it went to 120. What if it goes to 116? I mean, you're going to sit there with a $6 loss in Apple on an hourly chart? I don't think so. That's it. Look at the perfect ABCD that made on the 16th. I mean, the 16th of March. Look at that perfect ABC there at 126, and we went all the way down to 120. A beautiful stock for day trading. I mean, it really does give you a lot of opportunity, and you can trade it over a swing trade too, because each one of these, looking at an hourly chart, you can hold it a day or two, especially if you start out with a profit, or if you're an option seller. Selling option calls or selling option puts, that's where the real money lies. So just a few ideas, because there's a lot of way to put skin in the game, and the best one you want to be able to. Oh, do your friends still think oil is heading to 42? Yes, sir, I do. As I say, we think so. We got to 57 and change today, folks. I mentioned the fact that when we got up there to 61 yesterday, perfect ABCD, perfect 78% retracement. And if you wanted to just draw it out just a little bit more, you should measure the 382. And you'll be able to see how close that was to the 382 retracement from the 68 level. We rallied back, bada bing, bada boom, and we were on the air when we were looking at that yesterday. It turned out to be okay. Anyway, those are just a few of the things that we're watching here this morning. So they may sometimes they work, sometimes they don't, but those are just a few of the things that you want to be watching very, very, very closely here. We got gold trading here at 17.27 right now. We just need it to go down a little bit, folks, about another $20 down to 17.06, and we'll be happy camper. 1706, 1707. I've got it on my alert list. I can only alert so much, but by golly, this market is really turning around, folks. We just got a really positive note here in the S&P here when we popped above 3882. That was a sign that this market was probably going to continue going. And there's my good buddy forgot that we are on the radio show. I'm going to be just a minute. Just answer it for me, honey, would you please? That's anyway, hold on. I have a person that, family member. Anyway, it's we'll just move on here to one other thing here that I wanted to mention. Some brought the question about the bonds. Do I think that the bond market has finished? And finished going down? I don't really know, folks. All I know is that 3-drive pattern was a monster pattern, and we don't want to forget that because it paid us off pretty nicely. And what we're doing now is we're going to see if, in fact, it's going to bounce where we think it might. But that we don't know what's going to happen at that point, because this was absolute perfect ABCD pattern. We're going to bring it up to you again down there at that 153. You can see ABCD just as beautiful as you can. You can see this ABCD in the middle of it. And now we rallied all the way up to 157.08. 06 or 08 was the high today, and so we're ready to back off a little bit, probably down to the 154 and change to scare the boys again, and that's it, folks. This is why you listen to this show. Is what I'm going to show you next. We've been bearish Treasury bonds for a very, very long time. Okay, now I didn't press this one to the downside. We did okay, but we left so much on the table because we were doing things in gold and other things. But this is something that's going to happen in the stock market eventually. Whether it's in my lifetime or not, I don't know. But look at this chart very closely. You'll see the pennant that was up there when it was trading about 173. We gapped down below that. Then you notice we rallied up to it. I didn't draw that Gartley in. That was at 171. And then the one that you want to pay attention to, folks, is the one right after that. The real little quiet 382 rally over a 2 or 3 day period where it doesn't do very much. Oh, boys and girls, those are the ones that you really want to look for. Those is what, to give you an example, this would be like you're playing baseball, okay, and your team is up to bat, and it's the bottom of the ninth inning, and the bases are loaded for your team with 3 very fast runners, okay, and you only need 1 run to win the game. And guess who's batting for you, folks? The first guy up is Babe Ruth. Wow, not a bad hitter, right? The second, of course, is Ted Williams. And the third is Marshall Robinson out of Washington.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, we want to end the show here with a reminder here that, we have had a nice break in stocks, having a nice rally back right now. Whether this is going to be a major low today or not, we don't know. It has come back quite nicely, but as you know here, these markets can turn around on a dime and not give you any change. So make sure you're using stops, because if you're not using a stop, folks, you're telling Mr. Market or Mrs. Market that I know more than you do, and we know that is not true. So be sure that you put a stop in. Even if you don't believe it's going to be hit, put a disaster stop in so that if disaster does happen, you're not going to be involved with it, because the first mistake teaches, the second mistake kills. The first mistake is you put a bad position on. The second mistake is you didn't do anything about it, like protecting yourself with stop loss. And if you don't do that, you're in big trouble, no matter where the stop is. And don't use a death stop. Put it in the market. They're not to be looking for your stops out there in the market. I can promise you that. Well, I can't promise you, but I can almost assume that that's probably going to be what's happening, though. Keep in mind, folks, that this is all about how much money you don't lose, not about how much money you make. That's the secret to what we're doing here at TFNN. Tomorrow we're going to have none other than Norm, who calls it to the minute Winsky. He's going to have some special stuff for us on the physiological, or the biophysics of the astrology stuff, and what it means physically, I guess, with these numbers and stuff. He's going to clarify it for us. So I'm looking forward to seeing what Norm has to offer. And then we'll be looking at the weekend coming up. And, of course, we have next week will be Holy Week with Palm Sunday. And then we have Good Friday when we're closed on Good Friday. And, of course, we have April Fool's Day next Thursday. So that'll be interesting to see what's going to happen. Hopefully we won't get too many April Fool's jokes mixed in with the usual comedy folks we have here at TFNN. So live every day in an attitude of gratitude, and may God bless.